Good evening and welcome to our December London South East Natural Resources webinar. For those of you who don't know me, I'm Donald Leggett, Head of Investor Relations at London South East, and as ever, I'm your host for this evening. It's fair to say 2022 hasn't been the easiest of years for investors. The FTSE AIM All-Share Index has lost almost 30% so far this year, which is a bit crushing. So look on the bright side, if you haven't lost 30%, you have at least beaten the AIM benchmark. Thankfully, individual stocks have done far better, and we're delighted to welcome 4 excellent natural resources companies, each of which we've worked with previously. We kick off our evening with Helium 1, who are exploring for helium in commercial quantities in Tanzania. Then we have two lithium developers who are using contrasting methodologies to extract lithium. Atlantic Lithium are developing Ghana's first lithium spodumene pegmatite mine at Ewoyaa. And high in the Chilean Andes, Cleantech Lithium will be using direct extraction technology to produce green lithium from salars. Lithium, as you know, is the star metal in the mining industry currently, and it's worth noting these two companies are still undervalued relative to some of their lithium peers. Finally, we hear from Petro, who've made a large oil discovery in eastern Mongolia and are busy developing Heron 1. Each presenter has 30 minutes in total to make their investment case, with 18 or so minutes talking to slides before we take your questions and put them to the speakers. Okay, time to hear from tonight's CEOs. AIM and OTC listed Helium 1 Global is exploring for helium in Tanzania across 3 major project areas. Helium is used for many industrial purposes, and HE1 believes it has the potential to become a major player in a supply-constrained market. The flagship Rukwa project is in the massive Laguna Rift Basin in southwest Tanzania, and it has partially been de-risked by the 2021 drilling campaign, which identified a working helium system. And yesterday, of course, we had an RNS about the airborne technical analysis completed at Balangida Basin. We're joined tonight by CEO David Minchin, who will talk about that and much more, no doubt. Welcome, David.
Good evening. Thank you very much for inviting me to present on Helium 1 here today. It's a very exciting project discovering primary helium in the southwest corners of Tanzania with over 3,000 square kilometers of license area, and I'm delighted to be introducing the company to you, your listeners. Quick disclaimer statement. Helium 1 is exploring in the de-risked Rukwa Basin, where drilling last year has encountered multiple prospective intervals and identified helium shows, good quality reservoir, thick sealing units, and all the mechanisms of a working system. We've had a bumpy 24 months since our listing. In fact, it was our 2-year birthday just 2 days ago. So we've had it all. We had a strong run up into our drilling in 21, slimline well, which unfortunately, because of technical issues, we weren't able to test despite receiving excellent results and all the proof of concept for a working helium system that we were looking for. The last 12 months has been challenging for us against the headwinds of a high oil and gas price to secure drilling rig and services for our project in Tanzania. However, the reason why I'm talking to you today is I'm delighted to announce and to tell everyone that we are back on the ground. We have an MOU executed with Exalo Drilling, one of the leading providers in onshore drilling rigs and associated services. We have integrated services to be provided by Baker Hughes, who's one of the world's leading energy technology companies. Both these rigs have been secured exclusively for MOU, exclusively by Helium 1, to start drilling again in Rukwa in Q1 2023. Where are we drilling? We're going back to Thai. Why? Because we've developed our subsurface knowledge on an integrated matrix of geological data sets, and we are focusing on discovery. We know there's a working helium system at Thai. We know that there's helium to be found. we are now have in our hands the right tools, the right people, and the right equipment to go out and make this discovery. So why helium? A lot of people are familiar with the helium market and the fundamentals of it. Some people are not. It's got a range of high value end usages. It's unsubstitutable in a number of high tech, high value manufacturing processes, in MRI scanners, in space exploration, in computing, etc. We've seen demand being driven up quite strongly by the semiconductor sector in the last few years, and we're expecting demand to grow by between 4 and 5% CAGR to reach 8.5 billion cubic feet by 2030. Compared to that, the supply side has been hammered. The closure of the US Federal Reserve in 2019 created a supply crisis that has now been exacerbated after the illegal Russian invasion of Ukraine. The Western companies which were developing helium from the MORE project have now all left Russia, and there is a 2.1 billion cubic foot supply gap in future demand, and that is not going to go away. It's been exacerbated as LNG processes are now piping gas directly into Spain. But fundamentally, the problem is that the existing supply is inelastic. It's based on a byproduct of hydrocarbon, and it's a new primary source is required. This challenging supply outlook has been reflected in quite dramatic price increases. In the last year or so, we've seen long-term imported prices in China at over $400 an MCF. We're seeing spot prices at over $1,000 an MCF, and end users are expecting it to go higher. We will have seen in November this year that NASA signed a 5-year long-term contract for 1.2 billion cubic feet of helium at a price of $920 per MCF. That's almost twice what the existing contract price is. So there is an expectation amongst end users that prices are going to continue to rise as the supply shortage continues to hit home. And this is where Helium-1 comes in. Helium-1 is exploring for primary helium. This is high-grade helium, not associated with hydrocarbon or any greenhouse gases. We've measured seeps at surface at over 10.5% helium. That's 50 to 200 times higher grade than anything which is currently in production. We've got 3,500 square kilometers of license area in Tanzania along the helium fairway. It's the best license area in Tanzania, which, because of the various unique geological factors that have come into generating and releasing this helium, make it probably the best helium license areas in the world. We have developed over our nearly 6 years of operation. We've spent over $20 million in exploration and have developed an integrated matrix of geological data sets. This is everything from multi-spectral satellite spectroscopy, which is used to identify small-scale seeps and diffuse seeps, which you can't spot on the ground the same way as you can with macro seeps, where you can take samples of gas from the bubbles. This is a diffuse seepage, which can be recognized through satellites. We've combined that with electrical resistivity tomography, airborne gravity gradiometry to understand deep-seated basin structures for migration pathways, and looking for high points where there is potential for closures, which we then follow up with 2D seismic to understand how these structures are reflected in the sediment above, with our primary targets in the lake beds and in the Karoo, where we've got good quality seals as well as excellent quality reservoirs. And we know about this because, of course, we've been drilling that last year. We were able to recover an awful lot of data from that hole. Not all the data that we'd like. Unfortunately, because of the technical issues which we experienced, we weren't able to run a wireline. But we were able to pull out an awful lot of knowledge, including rock chips, which we were able to run chem scan on to really get a detailed understanding of the stratigraphy, and also gas chromatography, where we identify those multiple helium shows from surface all the way down to basement. And importantly, some good quality helium shows in the Karoo, which remains our primary target because of the thick sealing claystone above the sandstone. After integrating all of that knowledge, getting a real understanding of the basin system and of the prospectivity, the way the helium migrates and is trapped and stored, we decided to go back and do a tie again. Why are we going back to tie? Well, because we're not focusing on exploration, we're focusing on discovery. Our drill location has been guided by the phase 2 seismic, which has improved the definition over the tie prospect. We have the drill well there, which tells us what the stratigraphy is, which has indicated these multiple helium shows, which you can see as the blue dots on this seismic section on the left there, that tell us we have a working helium system. We were incredibly encouraged by the results of 2021, and that is why we're going back again. We're in a better position because we have more data, we have more knowledge, so we're able to position our wells better. The initial drilling in 21 was actually the wrong side of the bounding fault to test for closure in the lake bed. So the test, first well in well 1 is designed to test both closures, the lake bed closure and the higher topography Karoo closure. We've got a much better understanding of the size of the closure, of how the fault continues off to the northwest. And we have a good, robust structural closure, which we are hoping to prove will hold helium gases. And how are we going to prove it? With this large rig being provided by Exalo. It is currently in operation in Southern Africa. Our understanding is it is due to be released before the end of the year. Once it gets released, it gets broken down into 28-ton loads and transported to Ewoyaa, so we're able to start drilling as soon as the rig and services arrive on site. This is a much bigger rig than we had last year. We've included humans for scale, and the picture on the right, those are not pygmies, those are real size people. This is a 1,200 horsepower draw works, 300-ton hook load and 43-meter mast. It's currently drilling at 3,500 meters, so we have a great deal of confidence that this rig gives us the best chance of making a good quality hole, 8.5 inch, all the way to basement. So we're able to test the well and confirm the discovery that we're all hoping to find. The rig is being accompanied by the Baker Hughes integrated service package. Baker Hughes are one of the world leaders in well site technology, and they're a leading energy technology company. They have 100 years experience in 120 countries around the world. It should not be underestimated the importance of having Baker Hughes as our partners and our technology partners in this project. They have the latest scientific instruments in their quad combo logging tool, which will assist in identifying helium gas in the subsurface. We plan to test that gas using a reservoir characterization instrument, an RCI tool. This is basically a downhole gas sampling tool. It goes down the hole, and a probe comes out of the sides directly into the reservoir rock to suck a sample of gas into a chamber where it gets sealed and recovered back to surface. Now, this has actually multiple advantages over an open hole drill stem test. Firstly, you're taking point samples, so you know exactly where your gas sample is coming from, whereas a drill stem test, open hole, tests a section. Secondly, you're able to take pressure readings. Now, that's very important, especially in a reservoir like the Karoo, where we know we've got interbedded clays and mudstones, because by looking at the reservoir and by looking at the pressures in the different reservoirs and the sandstones, you're able to understand the connectivity between the layers, which helps substantially in your reservoir modeling and in your production designs. Thirdly, you're collecting samples of fluids and gases in situ and at their in situ pressures and temperatures, which all feeds into important knowledge for understanding the reservoir which you have and understanding the prospect which you're analysing. Another big advantage of Baker Hughes coming to site is they have all of the equipment in order to pressurize cement as 7-inch liner down the hole. This means that the discovery well can then be completed and used and suspended as an appraisal well. So we can come back at a later stage, we can perforate, and we can do the 30-day flow tests, etc. To give us all the engineering knowledge that we need to be able to fast track this into production. The drilling is targeted in Q1 2023. The unknowns, the uncertainty on this timeline would come around the rig release and the logistics, both of which are being sorted out under commercial terms as we speak. Drilling is anticipated to take about a month, with results to come at the end of the well. So not a long lead from here until first gas. Looking ahead, a discovery at Tai is just the beginning. We have big ambitions to grow this company from an explorer to becoming a globally strategic producer and supplier of helium into a global market. We would facilitate that by fast-tracking Tai into production. As already stated, the exploration well becomes the discovery well, becomes the appraisal well, and we can run all of our feasibility and engineering from the one well to go rapidly from discovery into applying for mining licenses and then onwards into production. In parallel to doing that, we've only run detailed seismic over 10% of the Balangida Basin, sorry, of the Rukwa Basin. There's a huge amount of upside to be found, and we're only just scratching the surface of our potential. So I'm keen to move in parallel our phase 3 exploration across the remainder of the Rukwa Basin, and of course into Ayasi and Balangida, our pipeline projects. We're keen to grow the pipeline of the project in Tanzania and around the world. You know, the Tanzanian discoveries, Tanzanian projects which we have, are well suited for export out to China and the Far East and India, etc. There are other projects around the world which are, you know, we have a team now of helium experts, geologists and operators who understand how to evaluate these projects, and we can identify many low-value projects, undervalued projects, which can help to expand our footprint to become a globally strategic supplier of primary helium, which is what the end users need. The lowest hanging fruit in our pipeline is obviously Ayasi and Balangida. We've got 1,000 square kilometers on both those licenses. We've measured helium seeps in these up to 10.6%. Interestingly, we also measured argon. So argon is another noble gas. It's got another range of industrial usages. And a rapidly growing market. We've measured 2% of surface, which is about twice what you'd expect in the atmosphere. It's interesting as a byproduct potential, but importantly for me, argon is sourced from the radiogenic decay of potassium-40, which you find in basement feldspars, and it gets released by the same mechanism releases the helium, which is warm fluids coming through the crystalline basement and triggering the release of gas into the basin. So measuring argon also gives us a great deal of confidence that the system which is sourcing helium is working. And the work that we've done here with the airborne gravity gradiometry to really get our heads around how the basement structure is working and the evolution of the basin. This all feeds into defining our phase 3 seismic plan for Ayasi and Balangida, as well as Rukwa, and then to define drill targets and expand our pipeline. You know, we are a company, we are an exploration company, we are a growth company, so we're going to grow. The other string of our growth is, of course, fast tracking any discovery at Tai into production. Now, we have worked on a modular helium separation plant. These are constructed off-site and brought to site where they're clipped together with the wellhead, etc. It's relatively low capital cost compared to the margin. We have outlined numbers for $50 million per plant to produce 350,000 MCF per year at an operating cost of about $20 an MCF. At a price of $400, that is a dramatic margin. If the scientists at NASA are correct, and we're looking at northwards of $920 per MCF, the margins on any form of production become astronomical, and it is of interest for us, the company, to be able to bring Tai into production as quickly as we can, so that we're able to take advantage of that high price and be able to self-finance our continued exploration and development work across the rest of the basin. The logistics out of work are incredibly simple. There's 130 kilometers on Lower Road, which is there photographed on the top left. It's not all of it that pretty, but you get the idea that it's a good quality gravel road with a laterite topping. It is passable all year round. And then you're on to the Tanzam Highway. I took that photo myself, the one on the top right. I've spent a lot of time on that road. It's slow and boring, but it's well maintained, and it gets you from A to B in a safe and considerate manner.
Okay, it's about time to wrap. Are you okay with that?
Time to wrap. Okay. There's one last point I wanted to make about our primary product, which is that it comes without any associated greenhouse gases. This is especially important when you look around current helium supply, where 1,000 litres of helium from Qatar North Field, enough to fill one MRI scanner, requires the consumption of 2.5 million litres of hydrocarbon. You know, but if you scale that up and you consider a NASA Artemis launch requires 12 tons of helium, that's 30,000 tons of natural gas. So what we're doing, because of our unique geology and our unique helium nitrogen mix, we are able to produce a carbon neutral source of helium, which sets us up to be the primary supplier into the 21st century, with the right commodity at the right time, in a de-risked basin, with the right management team, the right equipment, the right rig, the right services to explore, discover, and develop a world-class project, which can be a changer for the supply of this high-value, high-tech, highly strategic commodity into the next century. Thank you very much, and I will open the floor to questions, I suppose.
David, that was fantastic. It sounds like you've got a very exciting project there.
Yeah, I have. It's been quite challenging over the last year because, as I mentioned, with the headwinds of the high oil and gas price, trying to secure rig and services to come out to Tanzania has been very hard. You know, the teams all worked incredibly to bring this together, despite multiple hiccups and dead ends, yeah, we're delighted to be able to go back onto the ground. We're delighted to be drilling in Q1. It's a really exciting time for us.
So talking about drilling in Q1, what do you think the chances of commercial success on this drill are, asks Adrian Calder.
So we obviously have internal numbers for chance of success. We don't discuss them in public because, as you know, it's a formulaic approach, which works best to compare like for like within the same basin. Which is the best lead? Which is the best prospect? Where do you want to test? What I will say is, if you think about the component parts of the system, which is source, migration, reservoir, seal, trap, we know we've got source because we've seen helium seeping up to surface, and we've measured it at up to 10.6% helium. We know we've got migration because we've got macro seeps identified by multi-satellite spectroscopy across the basin. We have an understanding of the deep-seated architecture of the basin from the AGG work that we've done, which points us towards the regional faults where they correlate with these micro seeps. We're able to say, yes, there is helium migrating within the basin. Do we know we've got reservoir? Yes, we're very familiar with the reservoir because of the drilling that we did in Thai in 2021 that identified high porosity sands and which was almost part of the problem, actually. It was a very good reservoir, which resulted in the downhole issues which we have. We know we've got
there's a yes or a no to this, is there? Do you expect to find commercial success, or do you not expect to find commercial success at Thai?
Well, of course I expect to find commercial success. Otherwise, I wouldn't.
That's all right. That's fine.
But it's a yes.
It's a yes. Brilliant. Mike Flowers asks, do you have enough cash to mobilise and complete the drilling of Thai? Thai 2, he means.
So yeah, there's been a lot of speculation about our cash position, and you know, we put out our our annual results at the beginning of today, and you know, people have seen that. Exploration is an expensive game. We haven't been out to market for 18 months, but we have been very frugal with our cash. Looking at the annual results, you'll have seen that there was a loss marked of some $13 million, but $8.7 million of that was due to an impairment on licenses which we relinquished. That's an accounting loss. So the way in which we account our exploration spend is we distribute it equally amongst all of our licenses and amongst all of our acreage. When we relinquished 1,000 square kilometers, which we did because it was non-prospective and non-valuable land, we had to account that as a loss. So when you take that accounting loss away from the overall loss, you can realize that actually we've been very frugal with the money that we have, and we still have capital reserves. Having said that, exploration is an expensive game, and the important thing is to make sure the money spent in the ground is value accretive. We're planning a highly value accretive exploration campaign, and exploration success at Thai in Q1 of 2023 is going to be good news for all shareholders. So as I said, I'm really excited to be going back onto the ground, and I'm really excited on getting the rig turning and hopefully bringing a discovery for all of our long-term shareholders.
Okay, Josh Cole takes us to Ewoyaa in Balangida, and he says he appreciates all the hard work this year. At least two people have said that, and that's always positive. Keep it up, he says. And then he says, are you looking to get a drill program at either of those two basins?
Yes, there's the work which Lorna intelligently put together on Balangida, and that workflow for understanding the basin architecture, which we're going to now apply to Ewoyaa. This is the first step in bringing these basins into a drill-ready status. So the geophysical, there's remote geophysical work now that will allow us to plan our seismic, which will identify closures and traps, which would then be hopefully identify closures and traps for us to then come in and drill test. So
if I could interrupt you there, David, it's clever technology, but is it proven technology? Are you convinced that it actually works?
The results are very encouraging. So it's a known technology in understanding the basin architecture. We're not going to look at the gravity and say, oh, just drill there. No, but it leads you into the next step. And the next step is to then to do the seismic analysis, to do the seismic data gathering, and then analyze that and interpret it and look for your closures and your trapping structures. So that's where we are. And yeah, I'm delighted to look forward to drilling in Ewoyaa and Balangida.
Brilliant. So it's sort of small steps, small discovery steps.
This is the way it goes. Yeah.
That makes a lot of sense.
Again, if you've got 1,000 square kilometers or 3,000 square kilometers we have, and we're pushing down one 8.5-inch hole, that means that 99.99999% of your area you've not drilled. So you've got to make sure you're drilling in just the right spot.
We've got lots and lots of questions to get through, so I'm going to keep pushing on. Adrian Calder says a few people have asked this. There's this, including Adrian, there's a speculation about a capital raise on the bulletin boards, those lovely bulletin boards that we love so much. Is this likely, and if so, when?
So as I've said, we've still have money in the bank. We've not been out to market for a long time, and it's important to us that we bring the most value accretive returns to shareholders with the money that we've got. So, the important thing for us is to make sure that we have a successful exploration drilling campaign in Q1 of 2023, and that delivers the discovery which everybody needs, and that's what we're focusing on.
Fantastic. Okay, Ben Cole, last question. Ben Cole's, when do you expect the MOUs will develop into the signing of contracts? That's not a bad last question, is it?
Yeah, that's a good one. We're advancing our contract negotiations. They're going well. Obviously, there's not a lot I can tell you about it because it's all commercial. But Exalo are keen to come to us, and we're keen for them to come there as well. So it's in process, and we will let you know.
Fantastic. And there we go. It's 33 minutes past the hour, and it's time to say goodbye to you, David. You've been a star. Thank you so much for joining us. Thank you so much to all your shareholders who've joined us as well. Thank you. That was fantastic.
Thank you. It's been an absolute pleasure. Thanks.
Pleasure was ours. And to all the shareholders, do hang around for the rest of the evening, because it's equally interesting and equally prospective, as you might say, if you're a miner. Next up, it's Atlantic Lithium, who until last November were Iron Ridge Resources when the company split into two strands, gold and lithium. Since then, Atlantic has grown the flagship project Ewoyaa in Ghana, which is a 255,000 tonnes per annum lithium spodumene pegmatite discovery, and it's soon to be Ghana's first lithium producing mine, and it's fully funded to production. Share price is re-rated, and the oil business has a market cap today of around a stonking £270 million. Based on the recent pre-feasibility study, Ewoyaa has indicated life of mine revenues exceeding 4.84 billion US. That's a very large number. Neil Herbert, chairman at Atlantic Lithium, joins us from London. Greetings, Neil.
Greetings to you, and many thanks for having me here today.
That I can say is a true pleasure. I'm really interested to catch up with you as a company and Atlantic, because it's been a year and a half. You've been up to such a lot and have really consolidated that mine prospect at Ewoyaa, haven't you?
Very much so. I mean, it's been a very exciting year for us. Obviously, we've achieved a lot. We've done our PFS study. We're busy moving forward to take the project to mining the year after next. Obviously, we're in the middle of a lithium boom, so this really is the opportunity. And I think Liberum, one of our brokers, has set out that this is a best-in-class project. So if you're interested in lithium, you should be interested in Ewoyaa.
Fantastic. I shall leave you to give your presentation now, Neil.
Thank you very much. Okay, so taking it from the top, and many thanks for that introduction. So Atlantic Lithium, we are listed on the ASX, we are listed in London, and as has already been said, we have a market cap of around 275 million today. What are we doing? We're in the business of taking the Ewoyaa lithium project to production in Ghana. It will be Ghana's first lithium mine, and we're very proud to be the first in country to take a project forward. To give a little bit of a backdrop to where we are entering a very changing situation in terms of lithium demand today. So obviously the key change here is electric vehicles. So electric vehicle demand has fundamentally changed the outlook for lithium. And we moved from a very low base of production historically to what looks to be a massive increase in demand, and indeed is already occurring. In terms of the outlook for the end of the decade, what we expect to see is a 6-time increase in the need for electric vehicle batteries. And indeed, the numbers out there, estimates from Benchmark Minerals, who are the specialists in the space, are we another 59 new mines in a decade. Now, any of you who have invested in the sector, you'll appreciate that the average time it takes a mine to get to production is 10 years. So any production that we can expect to see in that time, frankly, needs to be projects that have already been identified. We are very fortunate to have one of those projects. We've been working on this project now since 2016. And as a result of which, we've done a lot of work in terms of taking it forward and indeed looking forward to being cash flow positive by the end of 2024. So one of those things that are really good to point out at the moment, in the middle of the screen there, you'll see the last auction price, which is over $8,000 a ton for lithium concentrate. That's a phenomenal price, given that our average cost of production is well under $300 per ton. So you can see the potential sort of gains that you can achieve. We can't predict what the lithium price will be next year or the year after. What I can say, having worked in the industry for 25 years, is where you find yourself in this situation where a fundamental change in demand has occurred. The sector is hurrying to catch up, bringing on new supply. And as it takes so long to bring on new supply, you've got a supply constrained situation and prices remain high. To be frank, a $2,000 lithium price would be a fantastic price in this market. So being over $8,000 is truly wonderful. What have we got then? So at Ewoyaa, you'll see that sets out our resource statement today. At the beginning of the year, we had around 20 million tons. We increased that to over 30 million tons. We're in the business of increasing that again. We're also in the business of increasing the amount of resources that are moved up to reserves. So we've been doing an ongoing work program. You'll see on the right-hand side of that slide, a nice picture there. And this is really the holy grail of hard rock projects. This is large crystal spodumene. So what's really nice about this product, it's very low impurity. Talking to the converters, this is really what they want to have. It is ideal for their kilns. It's the best outcome in terms of what you can do in producing a battery. The pre-feasibility study, well, we did this this year and we completed it in September. We're now busy moving forward with the definitive feasibility study, which will include around the middle of next year. As it stands with this PFS, you'll see there are some really astonishing numbers. We made some very conservative assumptions regarding the lithium price. We used an average price of $1,360. That's obviously substantially below where the market is today, or where it has been recently. But even at that relatively low number, the numbers are really quite incredible. So you see an IRR of 224%, a payback period of 5 months. Yes, I've worked in the industry for many years. I've worked on some great projects, but normally we express payback in years. So this is really quite something. And with the existing resource, we've had a mine life of 12.5 years. So that's already a substantial period of time. And as you will see as we go through the presentation, there's lots of potential for growth in that. On those numbers, it throws off an EBITDA of $250 million a year. So that's very healthy considering our CapEx is $125 million for the project, and we have funding for such, as I will talk through in a minute. In terms of the project, what's really nice is, and I always say this is nature's gift, we have this very broad intersection. So this really is easy mining conditions. And what has happened over the life of this project is the amount of coarse grain spodumene against the fine grain has increased, which is the ideal scenario. So the coarse grain is the most valuable, and that feeds into our main product line. So if you look at it here, we have 3 products. Obviously, nearly all the value is tied up in the spodumene concentrate, but we also have DSO fines, which is an additional item which adds value. In the studies that we've done to date, what we have actually done is put them in at a very low value. So actually there is a market for DSO fines at the moment, which is around 10 times the price of what we put in the model. Obviously, it could be a nice additional income for us. and there is potential for this to add revenues before we start the main plant in 2024, which is something that we're looking at now. There's also another important byproduct, which is feldspar. There is a local ceramics industry, which we believe we could serve with this, and obviously to add value locally as they'd be able to expand their ceramics industry. So we'd be very happy to be able to provide that local industry if we can. There is indeed an international market for it as well. One of the things I have to highlight is, as it stands today, we have 50% of the offtake, which we have agreed to sell at market price to Piedmont. The other 50% has remained uncommitted. And going back to that first slide, we looked at the lithium. It's highly valuable today, far beyond the actual market value of the product, because people really need supply. Over $150 billion has been dedicated to these gigafactories, and they are all now looking for supply. I was at a conference in LA recently in which they highlighted that the real problem now is not the commitment to build the factories, to build these plants, but actually to provide the raw materials for them. And there's nothing more acute, frankly, at this point in time of where the lithium supply is going to come. So we are very well situated in that respect. Looking at where we are within Ghana, this is a really nice situation. As you look at many projects in Africa, you'll see they have considerable distances to be able to take their projects and take their product to port, and indeed over international frontiers. This is about as good as it gets. We're situated on the coast. We're 100 kilometers from Accra and 110 kilometers from Takoradi. A very nice situation. So what we have is very good infrastructure, and we'll come back to that in a minute. But what's really nice here in Ghana, and the things I really like about Ghana, is it's an established mining jurisdiction with a long history. It's a very well-developed country with good infrastructure. So here is that infrastructure. So we sit just off the main highway here that takes us to that deep sea port. It is a paved road, no problem taking product along it. We actually have the grid power running across the site at the moment. So we actually have to move that grid power a little bit off to one side. But given the nature of the deposit, being it all spodumene, it actually requires very little in terms of power. So compared to other projects which require to have a flotation circuit, which require more power, more energy, more tailings, this project is very straightforward and has a low power requirement, and it sits right next to the site as it stands today. And that port that we've been looking at, we actually had people out in the looking at the port the week before last. Very well served for industrial minerals. We don't really have to do anything there in terms of in addition to that port. And having worked on many projects in Africa historically, that's a real boon. The last comment there is in terms of the skilled labor market. And the reality is Ghana has a long history of mining, and as a result of which it has a number of universities which serve the mining community. If you work around the world in the mining industry, you'll often run into Ghanaians working in Australia or the United States. We have a lot of engineers, a lot of geologists working with us, and they are very pleased to be working with us because, unlike most of the projects that tend to be in the north of the country, you can actually work from home, as it were. You can live in Accra and actually drive the site reasonably, maybe stay at site during the week or even return home. So it's very popular with the Ghanaians. We were recently looking for a post in which we had over 500 applicants and many skilled applicants among them. In terms of Piedmont, Piedmont's interest here is obviously the offtake. They are building 2 hydroxide plants in North America, and we have given them 50% of the offtake, which they can buy at market on the basis that they earn into 50% of the project. In doing so, they provide us with over 100 million, 70 million of which is devoted to the capex. Any over and above the 70 million is shared 50-50 between Piedmont and ourselves. Obviously, we put forward a number in the PFS of 125 million. So people will be wondering where that extra money is coming from. At this moment in time, we have about $15 million in the bank. In addition to that, as I have said earlier in the year, we've been in discussions with the Ghana Sovereign Wealth Fund. Ghana Sovereign Wealth Fund invests in mineral projects in country. They've been doing extensive DD on the project. We saw them the week before last. They were very happy with the results of that DD. And I would hope by early next year, we would see and come in as investors. And obviously, it's very important to have them on board as local stakeholders. We continue to work on the project. So we did 47,000 meters of drilling. We've actually reported now about 36,000 in total. So we have about another 10,000 meters of drilling to come. I'm sure some of the viewers will have actually seen the recent results. and more of the same. And more of the same is very good here. So you're seeing yet more very long intersects of good grade and very consistent grade at all coarse grain spodumene, which has been fantastic results. I think there are a couple of highlights I'd pull out for that. We actually had some very sweet spots in the main deposit. Some of them are reported here, but we actually had ones we put out even more recently, which were all over 6%, which is very nice, which obviously may add to the average grade on the deposit. And the second one was it actually goes deeper than we originally thought it would. So we've actually had longer intersects of depth than we were expecting. So two things we expect to come out of that. Well, first of all, we need the remaining 10,000 meters of drilling to come out the lab. We expect to have half of those before the year end, and hopefully the remainder by early next year. And that will feed into a new resource statement. And what you can expect to see there is moving from partly moving up for the mine plan, so effectively putting more into reserves, but also increasing the overall size, of which there is plenty more potential. So here we are in terms of that exploration upside. And as you can see here, we've actually worked a very small part of our overall license area. In fact, it's only around 2% so far. We have a very good exploration team. Obviously, this is the same exploration team that identified the Ewoyaa main and the surrounding pegmatites that we've identified, but we have a lot more area to work on. They're working systematically across that area to identify new targets, and indeed you can see there the red spots on that are indeed new targets that we're generating all the time. So while we have 30 million tons today, I would hope with the update in the resource statement we would add a good amount to that when we put that out at the end of Q1. And from that also there's plenty of upside again. So we talk very speculatively about there being perhaps 60 or 100 million tons across our license area eventually. We're not waiting for that. We're very much in the business of taking this project to production on a good timeline. One of the things that's very important to us is maintaining a good relationship both with the community and with the government and all local stakeholders. We've actually been blessed by very good relationships. We had another community meeting about 10 days ago, very good meeting with the local community and indeed with the government that same week. The government's very keen to see this project progress. Obviously, Ghana has a very long history in gold mining, but wants to diversify into other minerals. They very much welcome this project, and they also welcome the idea of entering, if you like, the mineral space for EVs. The local community very much enjoys the employment. So we're overwhelmingly a Ghanaian company. We have very few expats. I think we only have one expat currently working country. The rest of it, as I mentioned earlier, we have lots of highly qualified staff are Ghanaians, and indeed from the local community wherever possible. So we are very much committed to continue to contribute to that local community and help with their development. But at the same time, obviously the Ghanaian government very pleased to see potential new tax revenues, which will be substantial coming from the project. So here's Ghana. It sets up the regime as it stands today. Obviously the government gets a very significant stake in what we do in terms of tax revenues, and that's very important to everybody involved. But again, I'd like to highlight the fact that it is a very good mining jurisdiction, 100 years of mining history, and indeed a very highly qualified workforce. What's also nice is because they're used to going through the permitting process, that the government actually is proactively involved. The sovereign wealth-funded Ghana, who we've been talking to, that I mentioned earlier, also very supportive in seeing projects that they invest in get developed. So obviously that's very helpful too as we take the project forward. So in terms of the company today, as we set out earlier, this is the market capitalization. We have a strong cash position, and obviously the continued funding from Piedmont helps us a great deal. We look forward to further funding from the Ghanaian Sovereign Wealth Fund, assuming that they make the final investment decision. Interesting to look at our major shareholders. Our biggest shareholder is Assor, and some of you may be familiar with the group. It's a major mining group in South Africa. They've been long-term investors. They provide us a lot of additional expertise in terms of their experience in mining, so we very much welcome their involvement. When we put out the PFS, they actually assigned somebody to, if you like, stress test it every which way. And the comment came back from the engineer who was assigned to it is that, I couldn't break the model, it's too good. And you will have seen just in the last 2 weeks there, Assor increased its stake. So I take that as a big vote in confidence from them. Obviously, Piedmont, which is our off-taker and our partner, that's owning the 50% of the projects in there. I think importantly also, you can see the decarbonisation fund there also taking a stake. So that's happened this year. I think one of the things we can expect to see over the next year is as we continue to decrease the project, de-risk the project, and bring it closer to production, is actually see a larger institutional interest in the register. So in terms of the board, obviously we have a very experienced team. I myself have worked in the mining industry for a very long time. So it's a bad thing. We also have Stu Crowe as our senior non-executive director. He's also the chairman of Lake Resources, another major new lithium company. We have our exploration team, which is highly experienced, which made the discovery, which continues to expand our base on those exploration licenses. But one of the things I would like to pick out, I think is very important to us, is obviously we're in the process of transforming the company from exploration to mining. We brought in Keith Muller. We're very lucky to have Keith. I'm delighted that he joined us. He has previous Africa experience, but much more importantly at this point in time, he's actually run a lithium mine, will be very similar to the setup we have at Ewoyaa. He was running the Mount Catlin mine in Western Australia, and that's a big plus to us. So I'm delighted to have him on board. So that's where we are today. Obviously, the project is going very well. We have a significant resource, which you can expect to grow. You'll see results of that coming out next quarter. Indeed, as we move through to the middle of the year and the completion of the DFS, you'll see the different stages coming forward and the important steps we have to take in terms of making sure the project gets to production on a timely basis. We have a strong ESG credentials. Obviously, the nature of the deposit, its situation means that we have a very low environmental footprint, very small footprint, which is an advantage in itself. There's excellent economics. And I think probably the final comment I would say is that we're very well funded. But on top of that, there's a lot more we can get out of this deposit as we go on, both in terms of growing the resource, which could extend the mine life, but also potentially increase our annual production as well. So we're currently putting a throughput of about 2 million tons. One of the things that we can look at next year potentially is increasing that to 3 million tons. It wouldn't add significantly to the capex, would obviously add to the economics. Not saying we'll go down that road yet, but it's something obviously very tempting for us to look at as we move forward. And I think that's about it. I understand we have lots of questions, so very happy to take those questions now.
Yeah, lots of questions indeed. I think we should just kick off with what's probably a relatively easy one for you. How big a lithium mine do you think Ewoyaa might eventually become?
That's a good question. I suppose in terms of size of the deposit, as I set out before, I mean, it's speculative. We're currently about 30 million tons of reserve and resource. We would hope in the next resource statement we'll be increasing that, 3, 5, maybe 6 million tons more. In the longer term, we think the project area has a lot to offer. So very speculatively indeed, and just throwing it out there, it might be 2 to 3 times as big as it currently is. So that's big in itself. The other side is the big.
Would you like to do that by developing resource and then into production, and then it becomes self-servicing?
Oh, absolutely. So, like all good mines, you continue to add to the resource as you go along. So we don't want to wait to get to a much bigger resource today when the opportunity is to take production and achieve cash flow earlier. So we do that in parallel. We continue to develop the exploration side as we move forward. The other side, as I mentioned, is now we're getting to the point where the resource is growing, and we'll see how that comes out in the next resource statement. We could look at higher production as well. So there's lots of potential there. And Keith Muller, our COO, who you brought in with all his mining experience, will be brought to bear on that.
And I'm sure you've been asked this many, many times, but at a very big, at an overview level, how do you see the funding for the project developing? Just you deal with this every day. Just break it down for us.
So as I said earlier, if you look at, we have about $15 million today. We have some ongoing funding from Piedmont. They provide 70 million capex, plus 50% of any overrun on that. So if you look at it today, the current estimate on capex is about 125 million. So potentially we could be called on for half of that, which is what, $27.5 million. We have 15 million in the bank. As I've mentioned, I hope to see the Ghanaian sovereign wealth fund come in, and we have deliberately avoided looking at any other funding options until they make that decision. I was with them 2 weeks ago. They gave the thumbs up on the DD that they've done. The same way Assol got an engineer to look at the project. They had an independent review and an internal review. And they initially said when we gave them the numbers, it looked too good to be true, but actually at the end of it, they said, well, actually it turned out to be true, which is very nice. So we're hoping to see them in. Even if we didn't go down that road, we do have some other funding options, obviously with 50% of the offtake uncalled for and a scrabble, frankly, by the converters to find new supply. We could enter into an agreement on that side, provide funding if we needed to.
Okay, so Robert Churchlow asks the obvious question, can you please put to bed suggestions that you're looking to do a share placing? And much of what you said, puts it to bed, but on the other hand, it is
very direct question.
It's for you to say.
So as I've said, the placing that we would do would be for the sovereign wealth fund, but I have no intentions today to do a placing anytime soon beyond that. There's just no need. We've got money in the bank. It would just be frankly rude to go out and raise money when we don't need to.
Okay, and that leads us to, you said before we came on air that the two difficult things about any project are financing and licensing. Clay Sinclair asks the licensing question. His biggest concern is the mining license, he says. So what reassurances can you give Clay that this is progressing well, and could it possibly be granted earlier than expected? Are licenses ever granted early?
Well, they do sometimes. What's very nice about Ghana is that it goes through these permitting cycles, I won't say all the time, but regularly, because it's a mining country. So they're very systematic in their approach to it. Again, I was out there in Accra 2 weeks ago. Tremendous amount of support from the ministry. Obviously, they've gone through the process of interrogating our application for mining license, which we put in September. They've come back with quite detailed comments upon that and questions. But frankly, nothing that we can't manage. We expect to answer those. I think we're answering those next week. I don't want to commit the team overly, but frankly, we're very confident we can address those properly. I must say, both the ministry and indeed the local community have been very supportive of the project. So far, so good. I must say, I can't see any problems with it. It's a very straightforward project. We don't have any sort of toxic waste issues or any of those sorts of issues. It's a small footprint. Can't see it being done any sooner than September, but I'm not expecting it to be much later either. So there are several bits for licensing and permitting that we need to work through. Obviously, the environmental aspect is ongoing. We would expect to meet that next September. Perhaps the mining license might come in earlier and then we get our license to operate. But so far, so good. It's a very good mining jurisdiction. Not expecting problems, but we take it seriously. We have a whole team working on this.
Okay, Clay's the second part to his question. This is a slightly more of a curved ball. If the Ghana Sovereign Investment Fund do take a share stake, and it would be a delight for you if they did, at all levels, it would be a fantastic thing to happen. Does that pretty much rubber stamp the mining license? It's a cheeky question, I know, but there you go. It's not my question, it's Clay's.
Well, obviously these are, while at the end of the day, this all leads into government, they are separate divisions. It must be said, though, I think that the Sovereign Wealth Fund, where it has a very rigorous process itself regarding its investments. And so if you meet the standard that the Wealth Fund has, then to be frank, it's very supportive in terms of getting the mining license done. I'll put it that way. So their endorsement, frankly, is a sign that they believe that there won't be an issue with permitting. They don't invest in projects that they don't think are going to get to production. So do consider it, I think, a vote of confidence if they make that decision and that comes out early next year.
Okay, that's great. Let's turn to, I suppose, the other great conundrum. The price of spodumene concentrate into the future.
Oh, very hard.
But it's a fascinating one, isn't it? Because all the experts are arguing at the moment. Goldman Sachs are saying the price is going to drop, and forgive me, I've forgotten the long-term player who's been pricing this forever, who totally disagree with them and say it's going to be strong for much longer. Where do you stand on all this?
I guess, experience is a terrible thing, but I have some. So in the early noughties, obviously, really at the turn of the century, no one was expecting the boom to occur in China in copper and other minerals. And obviously this did amazing things. I had a copper mine at the time. I was working with Antofagasta, and you can see the amazing profits that it generated. The reality of this industry is this. It's very hard to bring on mines quickly. 10 years is an average timeline. is entirely realistic from first discovery to taking to production. In the case of lithium, if you compare it to copper or nickel, you don't have a lot of projects that are being looked at in the past. So the scramble to bring new production forward is very much on. 59 new mines is the estimate the benchmark minerals have out there. The idea that 59 new mines could be brought on in a decade is mind-boggling. I just can't imagine that it will be happening. So what I do expect is that there will be new supply. I wouldn't want to predict what the price will be on any given day, but in a supply-constrained sector, the price is high, and it will remain high. $8,000, I wouldn't like to say. Maybe it will go higher, maybe it will go lower. But to be frank, $2,000 price would be an amazing price for a project like this where the OPEX is so low.
Yes, you'd still be going, that's fine, thank you.
Absolutely.
Okay. What's the grade that your spodumene concentrate falls into? I understand you get battery grade, you get aggregate grade. Where does your spodumene fall?
This is just about the best you can hope for. I mean, if you talk to the converters, they will say is of everything they would like, it is this low impurity product that we have from this coarse grain crystals that we have. So the standard in the industry is the 6% concentrate, which we can certainly produce. I actually understand, talking to people like Keith, that you're actually better doing a slightly lower grade because actually you make more money on doing that. There's a small penalty, but you effectively get more out of the deposit. There's sort of a sweet spot number there. I wouldn't like to say what it is today, but I've seen sort of 5.6 is generally typically what people produce. But producing that 6% concentrate wouldn't be any problem for this plant at all.
Crikey. Now, we are out of time. I have to apologise to all the folks whose questions we just didn't get to, but I've got to say that was fantastic. I really, really enjoyed it. What an exciting project. You don't often hear about projects which are quite that exciting. So I'm sure everyone enjoyed it. I'd just like to thank you so much for joining us. Neil, it was only a few days ago we signed you up, and that was terrific. Sincerely very glad that you decided to speak with us. Thank you.
Thank you very much indeed for having us.
It was a real pleasure. Thank you. Okay, and so to AIM-listed Cleantech Lithium, 2 lithium companies in a row. They're developing a faster to produce and greener form of lithium using direct extraction techniques in the mountains of Chile. The company's intention is to produce material quantities of battery-grade lithium from 2025 onwards with near zero carbon emissions and low environmental impact. Cleantech has 2 prospective lithium projects entirely controlled by the company. Those are Laguna Verde and Francisco Basin projects, located in the Lithium Triangle, the world's centre for battery-grade lithium projects. And it is developing a third. Aldo Boitano, Cleantech Lithium CEO, he joins us from Australia, which unfortunately means that he's got up in the middle of the night.
Yeah, it's 3 a.m. here, but I'm very delighted to be invited once again.
3 a.m. Aldo, and how are you feeling?
I stay with the jet lag, so I work during the day, and then I go up again and then sleep again. I'm fine.
Did you manage to hear some of the Atlantic Lithium presentation?
Yes, all the presentations, and specifically Atlantic Lithium, a company who got dual listed here very recently. And
so how about I kick off my this is rude because you've not done your presentation yet, but how do Cleantech differ from Atlantic?
Well, we produce lithium out of brine. We have I know they're doing their best to have the green credentials and ESG and all that, but we aim to be the greenest lithium producer of the world with the use of renewable energy and a direct lithium extraction technology that we've been working for many years and have proven in our case. So it is different. Most of the world's lithium is being produced out of spodumene, and we intend to change that with more brine, clean, green production.
Great. Okay, now off you go. You do the presentation, and then we shall pick up our conversation after that. Thank you, Aldo.
Yeah. This we just started with our vision to seek to be the greenest lithium supplier to the EV battery market, and at the same time we're the most advanced project in Chile that will go to market. We presented this in other times, just a snapshot of the 3 projects we have. one of them a greenfield exploration in northern Chile, close to Salar de Atacama. And then the most two developed ones, Laguna Verde and Francisco Basin, they both account for 2 million tons of resources of LCE, and 800,000 of them are indicated and measured. We control the whole basins. There's no competing lithium projects. That's very important for direct lithium extraction, where you can re-inject the brine and you have just one hydrogeological model on your own mining rights, your own tenements. And we don't have a significant flora or fauna at the elevation. We are 4,300 meters, and there's no indigenous communities on site. We have an experienced board and management. We just sent an RNS yesterday in Australia, today in the UK, of all the team and expansion of the team and what we've been doing. Just to recap, we're listed on the AIM. We raised 9.6 between pre-IPO and the IPO, and we did a very successful raising in the UK of 12.3 in November. The board, very experienced, our chairman, CFO, non-executive, myself, and the Jason Baberstock and myself, the co-founders. I have a background in renewable energy. I'm a civil industrial engineer, developed 3 projects that are being built that account for more than 800 megawatts of clean energy in the northern Chile, close to our projects. So we spent the 5.6 million pounds that we raised on the IPO on work we're doing at both more developed projects, Laguna Verde and Francisco Basin, with environmental impact studies, with base studies at both. Scoping study of Laguna Verde, it's about to be finished. We've been working on it. We're going to release it very soon. We produce 1 kilo of battery grade with our own resin. We now sign up with Sun Resin, the largest resin producer of the world, and at the same time, the one most advanced in direct lithium extraction with producing plants. We applied successfully for the Yamara license area, a big 344 square kilometers. We're finalizing that process. That takes some time, as the person before me explained. We have a new maiden resource at the Francisco Basin. We're mobilizing the team as we speak. We had to do some improvement on the roads as the winter was going away. And then have an upgraded resource in Laguna Verde. And I'm going to tell you the exciting things we're doing right now. We're drilling right now at Laguna Verde, 2 holes near to the lake. Just going to stop for a second. There's some ludicrous, laughable news out there that we're going to drill the lake, 77,000 tons of lithium, and when we have 1.5 underneath in subsurface aquifer, the lake, Laguna Verde just serves the purpose of sampling and things like that. We don't want to touch that whatsoever. But every once and then there comes an analyst that say things like that. But so to expand the resource and reserve, in both projects, we're drilling, doing some more extended geophysics. We're doing, we already received a small pilot unit plan from Belgium, or from a subsidiary from Sun Resin in China, and we're setting it up to produce small quantities per month of lithium battery grade. We're also putting the purchase order for a larger unit, and that will produce 1 ton of lithium per month, some 6 to 8 months from now. And we have hold off on strategic partners and offtakes. We're going to engage in those conversations as we finish the scoping studies. We're starting the PFS with Worley Parson. But again, our credentials, lowest environmental impact, directly supplied to the EV market. I already spoke about the projects. You can see the new drilling bores, LB05 in the red color and LB06 in the red color, right into the lake, drilling horizontally. We're doing it a little bit different from the previous season. We're starting with 20-inch holes, going what is called the telescopic drilling. We already have LB06 to the east of the basin, completed the first 50 meters, cemented the bottom, and we're going to go all the way down to some 500 to 600 meters with an 8-inch casing that will allow us for pump test and further upgrade the resource. We're going to be telling the market the drilling results as they come out, and then of course the York updated resource. LB05, the same thing. We're drilling simultaneously in this basin with two rigs. We have a very good campsite. We had a board visit. The whole board had a meeting in Chile, came to visit the sites, were at site, and then met with authorities, local authorities. I'll expand more a little bit as we go into that. At Copiapó, the nearest mining town, and then also in Santiago, very, very positive results. Again, all part of our RNS that was released today in the UK. Francisco Basin, we're going to be drilling 2.5 holes, finish FBO2 and then FBO3 and 4. Again, simultaneously with Laguna Verde. We're setting up camp, we're mobilizing equipment. We intend to start drilling December 20th. We need to do some road improvement as the winter was much stronger than before. Not us, by independent analysts from our brokers, Canaccord and Fox Davis, have said that we'll move between the two sites and the drilling campaigns from 2 to somewhere to 4 or 5 million tons of resources. But more importantly, and it's based for the scoping study, so we want to have most of that indicated and measured. The base numbers for the scoping studies, Laguna Verde finish almost, and Francisco Basin to be the first quarter of next year, have a baseline of 20,000 tons per year production for each of the sites. Yamara, it's a greenfield project. We've had all the license applications. We're finding we have for sure we have a preference rights on the mining, and we need the final stamp on the licenses so we can go drilling. We'll do a one drill campaign to make certain that what the geophysics indicates that we have in that lower magenta color, and we have a high grade of brine down there, and we'll see based on the high conductivity, low resistivity, that brine, how much lithium it has. It could be a game changer, but it's too early to say. But again, it's 344 square kilometers, double our 2 hour sites combined. And there's lithium in the surface, there's geophysics that you suggest, there's brine underground. It's a big subsurface aquifer, and we'll go there. I started saying in our commitment to environmental work with a combination of renewable energy and DLE. DLE, direct lithium extraction, has been around since 1998 in a salar in Argentina called Livent. They don't have evaporation ponds. We're 50 square kilometers or so, very aggressive. At the same time, they're depleting the subsurface aquifers. We'll take the brine up, we'll extract it with an organic resin, no chemicals added, wash out that lithium in the resin, send back into the subsurface aquifer with very good hydrological model, the brine without the lithium. I can explain more on the process, but we're one of the only ones in the world to answer the questions about DLE. We started in 2017 with Sunresin, who we now signed an MOU, the largest lithium DLE manufacturing and installations in the world, with 3 running factories, and then 1 in China, 1 in Argentina that is being built as we speak. We sent DAC-10 samples to Lilac in California, EnergyX in Texas, Arionics in France, and Summit Nanotech and Purlucid in Canada. Out of all of them, Sunresin is the only one who is a traditional mining vendor. They sell you the resin, the pilot plant. We bought a small unit, larger pilot plant. We bought a larger one, and they'll manufacture you a factory. In our case, we're looking for two factories of 2 plants of 20,000 tons per year. But I started the sentence saying that we can answer the question. You can ask us, of course, maybe an NDA is needed, how much water consumption we have, what are the different steps of the DLE, the layout of the plant, the energy consumption, the water consumption, the mass balance. Not all companies can answer that. There's a lot of movement in the companies proclaiming all the good things about DLE that you have at the resin level, 95% recovery, overall process 80 to 85, that's double, and then the traditional evaporation ponds. You have hours to produce lithium instead of 320, 30 days of the various precipitation on the evaporation ponds. But they cannot answer the questions of how they're doing it. And we've successfully produced 1 kilo of battery grade And we're going to be going very soon on an ongoing basis, producing lithium battery grade with both our properties. I already mentioned this. This is our agreement with the Sunresin. We met with them a very deep and transparent meeting in Santiago, Chile, just a week ago with all the board. Remember, our chairman, Steve Kessler, moved from an idea into production, the largest 3 copper mines of the world, Escondida and Collahuasi, where was the first CEO, and there Chile and Tomina in Peru, the largest uranium project in the world in Namibia, and the largest ionic exchange plant, and also the largest gold company in South Africa. But he's a doctoral degree in hydrometallurgy, and so he has lots of very relevant questions that were all answered by Sunresin. And Sunresin, more importantly, said that we're the most advanced project they're working, and they're very pleased with the relationship we built since 2017. So very, very excited about that. This is what I said. This is the 3 Sunresin lakes with low-grade lithium, producing lithium in China. On top of that, Hombre Muerto, Livent since 1998. And this is all the comparison of the different companies. And there's a lot of change in the market. There's companies who started with a proprietary work, and they switched to a vendor. We turned down a year and a half ago, a little bit more than a year, we turned down an offer of Lilac to take some equity exchange from us in exchange of they financing a pilot plan and by themselves and a PFS by Hatch. Their pilot plan also will get to the 10 to 15,000 parts per million concentration. They didn't go the chemical route all the way to battery grade. But long story short, we turned them down. We felt that we knew more with our own knowledge, and then the knowledge that we were working with Sunresin, and we went on. And I think we're proven right. We're more advanced in that relationship with that many others, and very pleased with that. The previous conversations of today is about infrastructure. We have excellent infrastructure. We have renewable solar plants nearby, but most importantly, that can be taken to our projects via high and low tension power lines with a substation in Francisco Basin, just a kilometer away. In mining terms, also very close, 52 kilometers from Laguna Verde to a substation that's a very short distance that will be covered on a power purchase agreement with vendors, and we've already initiated conversations. The line, in that case of Laguna Verde, will go underground. We don't want to create not only have low footprint environmentally, but also visually. So very, very excited with all this. We've stepped up on our team and our work with ESG focus. We're working with the local communities, again, who are not at site, but they're 2 hours from site, and we drive through them and working together with them. We have, just because we're hiring the best talent we can, we have more women than men working in Cleantech at various positions, hydrogeological work, engineering, and so on. We're very ambitious and very committed, and we have a very committed and developed team. I'll finish with Chile and the importance of prime mining jurisdiction. We had very, very positive results out there with all our board, with the local authorities on Copiapó. How important is that stuff we're doing. We're already engaging with the local university to step up their careers so we can hire them in the near future. We aim to be in production in 2025. We're being on roundtables with people in charge of energy, treasury, mining, to speed up the permitting, specifically environmental, that we're working. We have an office there. We're moving setting up our operations headquarters there, and very, very, very positive with everybody from the highest positions, governor, presidential delegate, all the way into community talks. And that same positive response was held in Santiago with the mining ministry and other authorities, again, all part of an RNS. Why I said this? Because Chile really wants to increase and increase the production. Us and others who will follow are important that we have green credentials, and so we tickle all the boxes with the green credentials, with the technology, and how advanced the project is. So we're very excited about the good reception of the government, and we expect news on that front. That's what I just said. Yeah, we're aligned perfectly with the government agenda, and the fact that we're not depleting the aquifers, small footprint, and no harm to the environment. It's good news for us and for the government and for the whole world. Where you can trace where lithium is coming from, and the aim of having green lithium is very important, especially on the automakers committed to carbon neutral. Again, we're holding off of having a strategic offtake or other sorts of conversations, but we've been approached by household names, some automakers, battery makers from around the planet. We're holding those conversations that we have a value of the projects with the scoping studies and then on the PFS. Don't need to expand on the demand for lithium. It's Atlantic Lithium had a wonderful presentation on this, how it's growing and the price and everything, historical high prices. We're for our estimates, we're going with a much more conservative number of a price of per ton, 22,500. This is the market. I said hard rock is far away from brine. Most, if not all, of the brine projects that will come into development and manufacturing and then exploiting lithium will shorten that gap maybe with hard rock, but more importantly is us. I hope others follow with really a low footprint. A lot of movement on the lithium space, a lot of acquisitions and deals. We aim to finance the project with some of those household names, some equity. The capex requirement for a 20,000 ton per year plant is $400 million. We're very well funded right now, up to the stage we are, all the way into finish the PFS and then raise for construction. We raised again. The latest raise is 12.3 million pounds in November, just a month ago. That's the path going forward. Like I said, resource upgrades, scoping studies, pilot plant for both sites to be a small unit and then a larger one, and then start producing significant numbers of lithium per month, and that will be feeding into future buyers so they can fine-tune their production with batteries and so on. So Laguna Verde a little bit more advanced, Francisco Basin catching up, and Yamará will have an initial site survey, initial drilling, and we'll see how we go from that. So just to summarize, short lead time to production, 2025, proven DLE technology, as and resin pilot plants, 1 kilo battery grade, excellent infrastructure, roads, renewable power, water supplies, cell phone coverage, paved highways, etc. We have the right to operate, again, because there's no indigenous communities on site and unique or significant flora and fauna to disturb. The government, the stakeholders, very supportive, and we keep those conversations going, and they're going very well and very positive. We're financed, as I just said. We're waiting for a strategic partner and offtake when we feel is the right time and a strong ESG focus. With this, I'm happy to take questions.
Aldo, thank you very much indeed. Thanks. That was well worth getting up in the middle of the night for. Thank you so much. If green lithium is to an extent unique, to what extent can you actually charge a little bit more, charge a premium in the marketplace for it?
That's been a conversation we've been having. I think we can. I mean, I'm sure with all regulations happening in the US, in Europe, everywhere, where they say we want the battery components, we want it to be greener, anything. If we, as we aim, are in production 2025, we should get a premium price. All right, if not, a lot of purchase orders, a lot of interest in purchase orders for lithium.
And I suppose that's the reason that you're not entering into an offtake agreement at the moment, because there's a degree of uncertainty as to what a premium you might actually potentially be able to charge. Is that a fair comment?
And at the same time, we want to have full valuation of the projects. We want to have right now we're a $60 million company US million company. That's our market cap. But we really want to increase that significantly. We're heavily undervalued. But
do
as
you think there's a potential for re-rating of Cleantech?
Yeah, it will go up certainly with everything we're doing. We're again putting most of the money on the ground. We are, for example, at the management level, we don't have any cash incentives, just stock options. So we're still at the size we are in the lower percentile of salaries being paid, and very committed. We have 12 employees in Chile, going up to 20 before the end of the year, beginning of next year. Some 40s, between 40 and 60 contractors in both drilling sites. And we've delivered. We've come out with the news of resource upgrade, the work we're doing, and now the scoping study will be the next. And that will trigger more formal conversations with off-takers and household names who want to come at the asset level with a certain percentage, and will help the finance. So that's a conversation on there.
So Adam B asks, when can we expect the scoping studies for Laguna Verde and Francisco Basin?
Laguna Verde is 99% finished. We wanted to have it this week. We certainly will have it in the next 2 weeks or so. Francisco Basin will be the first quarter of next year, but we're very, very close on Laguna Verde. I know we said that before. We're just wrapping up the last everything. I don't want to give a date, but within weeks. Within weeks.
Do take longer than you expect. So that's just a
lot of work. A lot of work. It's a thick document with a lot of things we're checking and asking.
If you were to give us a brief overview of how you get to production in 2025.
Yeah, we're going to be finishing
big milestones.
Environmental work, very importantly, with the consultant to the communities. We're already working. Have the PFS by Worley finished. The plant is being built in Argentina from some resin. Just to give you an example, it was 5 months. All the components, only 5 months since the purchase order from the company in Argentina until they were shipped. Every part and piece of that plant in 134 containers took only 5 months, and the construction is 9. So we aim to start construction in 2024 with the PFS, if not the FS.
Has that plant already been commissioned?
No. We have in our admission documents, we have the quotes and everything, but it's not very different from what they're doing in Argentina. The direct lithium extraction is nanofiltering at the beginning, then to take magnesium and calcium out, then the resin, who wind cycles, gets 95% of the lithium that is in the brine. The reinjection happens then, and you have a reverse osmosis, and you have forced evaporation, and then you have ionic exchange to take traces of boron and other things. So all plants are similar, even though the chemistry is different. What you do, you adjust the nanofiltering, you adjust the reverse osmosis, more importantly, you adjust the ionic exchange, you try with another resin. So we have quotes, we know about the layout, we know a lot of things about the plant, but we haven't put a purchase order. We're waiting to have a proper financing and when we have
you mentioned very briefly that the board had an on-site at Laguna Verde.
Yes, it was a two-week trip. Very exciting. They saw everything. We stay at campsites at 4,300 meters.
I wish I was on your board.
Yes. Well, we're hands-on. We're very hands-on. Like I said, Steve has a big mind.
Catherine Wentworth is a non-exec director of yours, so presumably she was there.
Yeah. We're everybody, and then that work, and then the work with the local authorities and the communities and everybody, both at the local level in Copiapó, the mining
town. What were the takeaways from the visit? You were there for 2 weeks. You met the government. You met everybody. What were the takeaways? What were the big things that stand out for you?
Takeaways was, again, Chile is a prime mining jurisdiction with all the infrastructure, the welcoming of the government at a national level, a local level for our project that is green. An outstanding team, 20-minute presentation of every single person on all the things we're doing, and very detailed. A review of all the on-site and all the stages of a project that will take us into production, all that path. Very, very, very exciting, very high-level conversations and very well received. Sun resin, the whole morning with them, going through every single detail of the process, the piloting plant that we're starting at small scale, the larger one, the plant itself. Yeah, very, very hands-on again, and we would not do it any other way. That's the way we are. Just
you had meetings on the ground with the Chilean government, I understand.
Yep.
Who did you meet, and how did those meetings go?
At the local level, we met with the presidential delegate, who's appointed by the president, the governor, who's the highest ranked person elected by the people. Then the number two, I'm the governor. Then the mining regional leader, and the university. That's the whole thing at the local level. In Santiago, we met with the mining subsecretary, the deputy in mining ministry. We met with part of that cabinet of the mining ministry in London a couple of weeks ago, 4 weeks ago, and set up these meetings. And then an array of companies. We met also with the local investors. We raised almost £1 million pre-IPO back in 2021 with very respected and high influential Chilean investors. That's all we did.
Non-stop. That's plenty.
Non-stop 10 days visit. Very excited.
Very good. So Adam B and myself, I suppose. Adam B asks about your plans for the 1 ton a month LCE pilot plant. How's that progressing? Is the order close for this to start? Oh, that's right. We've just discussed that, haven't we? How does that tie into your current exploration and development program timeframes? So,
well, right now we're drilling in Laguna Verde with the idea of having an 8-inch case all the way down in a mix of blank and slotted bore, that it could be a production bore in the future. We're drilling simultaneously in Laguna Verde, and we're about to start. Our goal is to start on December 20th on Francisco Basin. We're going to run again 2 drilling campaigns simultaneously simultaneously drilling in one of the sites. And on top of that, as soon as we get the license, we'll drill in Yamara. Not many companies can say that, to spend all the money on the ground on update resources and doing it all at the same time. So yeah, Yamara, it's a little different. It's at 1,000 meters. We control all the sub part of the basin. Excellent infrastructure, the Pan American Highway, cell phone coverage and electricity, but it's far north. So we're waiting for the final licenses to be granted, the stamp from the court, the mining court, and then go and drill. So it's all about putting the shareholders' money into updated resources, and at the same time, more developing of the technology. The team, all the permitting, working on the permitting and getting authorities to know about us and their interest of moving us forward.
Okay, my final question. When I spoke to you initially, you said that these are very unique salars, and that simply weren't there were a finite number of them. Well, you've managed to come up with a third one. Is there any potential to find yourself a fourth?
Well, see, we keep on working. We keep on working, and the work is carrying out that we're serious. We do invest the money on the ground and on hiring the team and overseeing everything. And that makes people say, okay, I have this property. Would you take a look at it? And that happens every week, every single week. I know most of those salars. I'm a mountaineer also. I've been driving around, sampling, taking photos, reading maps, all through that part of the lithium triangle that is in Chile, and very, very open to receive some more. But right now we're concentrated in our 2 most developed projects. We added this third one. We'll see how it goes, and from there find a more proper, if it's positive, found a more proper drilling campaign.
Aldo Boitano, we're out of time. Thank you so much for joining us today. That was absolutely fantastic. Well, I suppose it's evening for me, and it's more than middle of the night for you. You're a complete star. Thank you for getting up in the middle of the night to speak to London Southeast investors. Thank you so much. And finally, our final company, we hear from AIM-listed Petro, the Mongolian oil developer and explorer whose flagship development is the Heron-1 oil field in eastern Mongolia. Future production there and development elsewhere in Mongolia is what they're about. Heading 1 contains 100 to 200 million barrels of recoverable oil in Block 20 in the far eastern part of the country near the Chinese border, and Petro holds 2 production sharing contracts with the Mongolian government. The project has been slowed by Chinese COVID restrictions and land access issues, and CEO Mike Buck is here to tell us the latest as Mongolia heads into the winter months. Welcome, Mike. Welcome, Mike. How are you?
Thank you, Donald. I'm very well. How about yourself?
Well, I'm having a terrific evening. I spend a month or so putting these events together, and then there's this glorious moment when you actually get to speak to CEOs and they tell you all about their interesting companies. And I have to say, I thoroughly enjoy these evenings. And we've had you on many times, so I know I thoroughly enjoy speaking to you. So over to you. You tell us the latest on Petro.
Okay, well, thank you very much for the opportunity. I'm going to give an operational update, as this slide says. But first of all, for those that are on the webinar that had never heard of us, I'll give just a little flavour of the background as we go through. I won't read out the disclaimer. We have a board of directors. I'm the chief executive. We've got a couple of Mongolian ladies on the board from our founding shareholder. And Tim Bushell, who is well known in the London oil industry. Quite a lot of experience on this board and also a lot of enthusiasm. In summary, then, Petro is AIM listed and has always been Mongolian focused upstream exploration and production company. And we claim to be Mongolia's most active explorer. We currently have 2 areas that I'll shortly show you on a map. We made 2 discoveries in the east of the country in 2019, and I'm going to talk about one of those in some detail, Heron number 1, which flowed at 821 barrels a day on test, the 3rd best test rate ever recorded in Mongolia. We have achieved the success of getting our exploitation license. That was last year. Seems a little longer ago than that, but it was only last year. And we've been granted that license over a pretty large and prospective piece of acreage. We had planned to start production in 2022. A few things have got in the way, but primarily we have a little bit of a land access issue due to some inconsistencies in Mongolian land law. And although that's a little bit of a dry subject, I know some of our shareholders are frustrated and tearing their hair out, as am I. So I'll go into a little bit more detail than land issues would normally, I think, generate and require. We are now, though, making some progress, and I'll talk about that. And we also have some high impact exploration to talk about, and a new licensing round that has just been announced by Mongolia. So just to locate everybody, here is a map, an outline map showing the country of Mongolia. 2.5 times the size of France, and 3 million population, of which 50% live in capital. We have over in the east, a tiny little red blob there is our Block 20 exploitation license, 218 square kilometers, immediately to the south of the 2 main producing areas in Mongolia. And then over in the central part of the country, 2 little pink areas shown there are what we hold of Block 5, and that is where we have some frontier exploration potential. The western part of Mongolia is very, very lightly explored for oil, but as I'll show you on a map of the new exploration licensing round, there are many attractive basins. And one thing Mongolia has going for it, for the geologists amongst you, it has fantastic surface outcrop. So it's a field geologist's paradise. And just briefly on the Mongolian oil industry, the chart at the top shows Mongolia's historic oil production peaking in 2015 at about 25,000 barrels a day. So Mongolia has never been a huge producer of oil, but it certainly has the aspiration to increase that and is now trying to encourage investors to come in from the international community and help do that by revitalizing exploration efforts. Part of their reasoning here and why the government is so keen on this is that at the moment, all of that oil that's produced in Mongolia is trucked into China, and then Mongolia is left to buy its product needs from Russia. and the refined product need is around about 40,000 barrels a day. So Mongolia is currently building a domestic refinery that's going to take 30,000 barrels a day of feedstock. And obviously 30,000 barrels a day is more than the country is currently producing. So they're very keen to get some more fields on production. And the Heron discovery that we made in 2019 was a very, very timely discovery indeed, because once the refinery is on stream, currently estimated to be sometime around about 2025, then the government is certainly keen for Heron 1 to be up the production curve and filling the gap that is currently between the country's total production and the capacity throughput of the refinery. So let's home in on that acreage in the east. On the map, I'm showing our exploitation license area highlighted in white. And all of those green blobs are oil discoveries. You can see a number of them in Block 19, immediately to the north. We're only 15 or 17 kilometers away from PetroChina's processing facilities there in Block 19, from which they process their oil and then they truck it down south, in this case, through our block into China. As I said, Heron 1 gave good test results on DST. 45-degree API oil produced to surface. We've had a competent persons report done that kind of confirmed our own numbers for oil in place potential in Heron of just short of 200 million barrels in place. And that translates to between 33 and 60 million barrels, depending on the recovery factor you use. This is very low cost appraisal and development. Wells here cost of the order of $1.5 to $2 million to drill, depending on depth. And the Chinese contractors in this area are quite keen to work on a lump sum basis in which they take some of the risk. So basically they will be contracted to drill you a well to a certain depth for that amount of money. And if they don't get there, they'll try again for the same money. You don't have to keep paying them. Now, the land issue that I mentioned has been causing us problems is basically since we were granted our exploitation license, and even before that, the inconsistencies in the land law had caused some friction between central government and local government. And the local government in this area has been the host to the vast majority of Mongolia's production over the years. And it's fair to say that some of the local communities don't feel that they got a lot out of that production activity. And to some extent, Petromatad has been tarred with the same brush. We've done quite a lot of community work in the communities that surround our area. We have good relationship with the locals. But when it comes to central government trying to get local government to support their projects, there's still a little bit of work to be done. And in 2017, some new regulations and legislation was brought in that complicated matters still further. What we really need here is something called special purpose certification. And Block 19 to the north has special purpose certification granted in 2012. We've been trying to get it since 2019, since we made our discovery. And this legislation in 2017 has rather complicated that, in that there is now a process to go through that is a bit long-winded and has many, many steps. Anyway, the cabinet of the Mongolian government finally pushed for this process to be started for our acreage this year. And so the authorities are following that process right now. There were some meetings in August and September in the local area, as expected, or as we expected anyway. The local committees said they didn't actually support this certification. They didn't want it to happen. And so it was sent back to central government with a, no, we don't support. Now, they don't have a veto, but I think central government, well, I know central government hasn't faced this problem before because, well, anyway, this legislation is quite new. We were invited back down to the field to present to the committees shortly after they had voted not to support. They told us they expect to be ignored by central government. They said that's the way it usually works. But they also told us that if we continue to operate as we always have, fully in line with the law, and do things that bring socioeconomic benefit to the communities in which we operate, then they will have no reason to stand in our way. So that was very comforting that despite this friction between local and central government, the reaction to Petrometad as a company is pretty good. What we're doing right now on the land issue is we're lobbying the ministries that are involved, and that's the Ministry of Mining that controls what we do, and the Ministry of Construction and Urban Development that is responsible for the land law and the land agency. We're lobbying them to present to Cabinet as soon as possible to secure this certification. When we met with the Minister of Mining, the new Minister of Mining in October, he said that he, like everybody else in central government, now completely understands our problem, and they are going to fix it. He said he was going to fix it within 1 to 3 months. That was good news. I was impolite enough to point out how many months we'd already been waiting, but he took that in good part and understood that there is an urgency there. So we are actually seeing some progress in this. One of the other delays we faced is China's reaction to COVID. Fair enough in 2020 and 2021, but I'm not sure anybody expected that 2022 would have been as bad as it has been for China. And why that impacts us is that most of the services that are provided to the Mongolian oil sector come from Chinese contractors who are headquartered in China. And so the issues and impacts of that have been quite strongly felt. It's now improving. It's been improving since China stopped locking down its population. So for the last few months, the border has been easier to get stuff across, and things have definitely improved. And we're hoping that those issues are behind us, because we have been making preparations for production, even though we have this land issue. Some of the equipment we need is relatively long lead time items, made even more long lead by the fact that they've got to come across a border that was shut on the Chinese side for quite a long time, whilst on the Mongolian side, things have been open throughout. So anyway, in the time that, or during 2022, where we've been fighting this land issue, we've procured through tendering, ordering, manufacture and shipping all of the items we now need to put the Heron 1 well on stream just as soon as this legal issue is sorted out. The frac program for the well has been designed with expert input. The local Chinese fracking company has some very good equipment and some very good skills. We'd like to bring to that some international expertise, and that is why we've designed our frac using that international expertise. The contracts are in place to do that. We've also got contracts in place for the completion of the well, the testing necessary, and the frac service provider to actually do the work. And that's a relatively short piece of work. So as soon as we can get back on the well site, we'll be doing that. Our 2019 contract for drilling is actually still valid with DQE Drilling, who are the major supplier of drilling services in Mongolia. As I say, we have a contract that's still valid for one more well. But what we've been doing is we've been in negotiation with DQE for quite some time now, and we're at an advanced stage for a multi-well, multi-year drilling contract, which incorporates some significant cost reductions compared to what we achieved in 2019, also with some payment deferral. And that's a nice thing to have, in that allows us to get the drilling contract moving and pay for a portion of the well costs out of production from the wells that we drill. We are negotiating with DQE to try and finalize that. Once it's ready, we will go for regulatory approval. And we're hoping that our regulator, which is MRPAM, will approve that. At the moment, DQE Drilling is the only company in Mongolia that has rigs that can drill to the well depths that we need. So we're expecting that that will go ahead, but we're looking forward to getting that moving, because it gives us the potential to accelerate the development and therefore accelerate revenue generation and to increase value, because the major component of the development cost on Heron is drilling related. There's not much needed in the way of facilities, and we have nearby facilities in PetroChina's block and we have a memorandum of understanding with PetroChina to use those. So Block 20 exploitation license, we're pushing very hard to get this land issue sorted out. Meanwhile, we're negotiating this contract with DQE, and we're looking forward to getting this started as soon as possible. We're now entering the winter hiatus in Mongolia, although we do understand that PetroChina, having had a large backlog of work that it needs to do that resulted from the COVID shutdowns, is keeping some of the contracting companies running longer than they usually do. If we can sort out the land issue quickly, then we would try and use whoever's in country to do our fracking and testing and to get Heron 1 ready for production. Production operations run year round, but drilling operations and the associated services usually do not. We'll see once that issue is sorted out, who's in country and whether we can move quickly. Otherwise, it will wait for people to come back from their winter holidays back in China sometime in late March or early April. So that's the situation on Block 20 in the east. And as I mentioned, in the central part of Mongolia, we have Block 5. We haven't said much about this recently, but I think one of the big pieces of news here is that we don't have a land issue here because the local authorities here are prepared to grant the kind of permits that the local authorities in the east have been withholding from various operators due to the historical fights they've had with other operators and with the central government. So Block 5, we drilled a well in 2018 called Snow Leopard number 1. It was not a commercial discovery, but it had very good oil shows, basically proved that this area has a working petroleum system. And we have identified a series of structures immediately to the south of Snow Leopard number 1 in the same basin that we have now high graded and got ready for drilling. This is what we call our Raptor trend. And we have also just received approval from the Ministry of Mining to extend a moratorium we held in 2021, which was due to COVID delays. We've extended it through 2022. So we have basically extended the exploration period until the middle of 2024. So that gives us time to drill this well in 2023, and in the happy event of success, enable us to have time to acquire all the data we will need to get the exploitation license for this area. Now, this is transformational potential. The prospect that we're targeting is called Velociraptor. 200 million barrels of recoverable resource potential, and it's drill ready. In structures on either side, it has 380 million barrels of follow-up potential. The drilling cost here is $1.7 million. So compare that to the cost of a deep water well offshore Africa, for example. And this is very, very high impact exploration at a very, very low cost. We're giving ourselves here about a 20% chance of success. That's better than most high impact frontier wells have. And the reason it's better is because with Snow Leopard 1, we prove that this basin is actually currently producing hydrocarbons. We just need to find a structure in which those hydrocarbons have migrated. And we think the Raptor trend offers us that possibility. We have, with our Block 20 exploitation license being granted last year, the precedent is set to retain more than just the discovery area. In Block 20, we retained the surrounding exploration upside, and we would hope to do the same in the event of success at Velociraptor. And that's of interest to the government as well, because if we get going with this, then Velociraptor could be ready to be on stream by the time that the Mongol refinery needs it. So I think that's in part why the government was as enthusiastic as they were to give us that extra time to make sure that we could get this done. So potential to be on stream within 2 years. And we have, in the prospect itself, we have stacked reservoir targets, all within closure, below the mid-Cretaceous unconformity. So once we reach a depth of about 600 meters, we're actually inside the prospect from there all the way to the final depth. The total depth we're planning to reach is 1,500 meters. And so that gives us 900 meters of stacked potential within the prospect to investigate with the well. As I said, well cost around about $1.7 million. We have selected a contractor that has been approved by the regulator. The equipment is in country. And as I said at the start, most importantly, permits are in place. We have the land permit, we have water use permits, we have all the permits we need. This is huge resource potential, 100% in the hands of Petro. The fiscal terms in Mongolia are top quartile. So a discovery here would, as I said, be transformational, not just for us, but actually for Mongolia. And as I said, wildcat exploration at a better than wildcat chance of success, 20% versus what you would normally say would be less than 10% for a frontier well. Now, MRPAM has just announced, actually they announced on the 30th of November, and they made a presentation on the 2nd of December in Singapore at the Asia Pacific Scout Check of their 2022-23 licensing round. They are offering 14 blocks for PSC. They're shown on this map in blue, and the first tranche of these is available now. The first tranche is 5 blocks, which have a red highlighter to them, and you can see them located there in the central southern part of the country. Petro has a significant competitive advantage here. Obviously, we've got many years of experience in country, but we have a comprehensive database, which I think is the rival of well, everybody should be jealous of it. In the early days of Petro, a large amount of field work was done, not only in basins that we were operating in, but in many of the other basins. So as I say, our database is second to none. We've already identified the areas that are of interest to us, and we are very, very well placed to move forward with this. With the Block 20 exploitation license now being only a couple of 100 square kilometers, but we have that acreage for 25 years plus. And with Block 5 expiring in July 24, now is the time to restock the portfolio. And we're very much looking forward to participating here. We can do this at a 100% working interest, or we can find like-minded individuals to share the cost and the risk. So partnering for us in this would be something we would be very interested in, and we'll be advertising ourselves as a potential operator of choice for the licensing round. So in summary then, the Block 20 land issue is progressing slowly, slower than we would obviously have liked, but I think it's fair to say now that government is fully engaged, and this process under the 27 legislation is now moving forward. And what we need to see is the central government take the reins here and basically say, okay, thank you, local government, you've had your say. We're going to certify this land because we need this work to be done, because this needs to help fill up the Mongol refinery. And I'm optimistic that that is going to happen, and is going to happen relatively quickly. We are ready in the meantime for production startup and development once that land issue is sorted. And we're looking forward to getting that started as early in the new year as possible. The high impact Velociraptor well is permitted. Contracting is ongoing, largely complete. And as I said, the potential there is transformational. The licensing round has started, and we look to exploit our significant competitive advantage. And another thing that we're progressing that I haven't really had the chance to talk about tonight, but we will be talking again pretty soon, I hope, is we're progressing the possibility to get involved in the renewable energy sector in Mongolia. We've identified a would-be partner in this that has experience and has very, very good contacts in the Ministry of Energy. And we think their expertise and ours would make for a very strong joint venture to pursue renewables. And that's a string of a new string to the bow that we would like to exploit as quickly as possible. And with that, Donald, I think I've finished.
Okay, fantastic, Mike. That's absolutely brilliant, as ever. Let me just quickly name check a few people who've asked a sort of timeline question about the land issue. Michael Bowman, Richard Poole, Terry Goldsmith, Pretty much all the questions that we've had in reference the land issue. You said relatively quickly. Try and unpack relatively quickly for us. You also said that the Chinese might come back from their holidays March, April. Is that a realistic time frame, that March, April, the licensing, the special license, special purpose certification might have been sorted out?
I think so. Certainly, I was heartened to hear the new minister in the first meeting we had with him back in October say that he was fully aware of what the problems were, and clearly talking to him and his team, they were, and he was going to fix it within 1 to 3 months, were his exact words, and that was in October. So we're a way through that, but where the delay in this came was we were pushing for a very long time for this process under the 2017 legislation to start. And the central government was of the view that, well, no, we don't need to do that. We'll just get local government approvals as we have tended to do in the past. Our impression was that whilst that might work in somewhere like Block 5, where it has, over in Block 20 and in the Doornot area, it wasn't working so well. So I am now optimistic and very, very hopeful that we will get central government to say, okay, under these terms of the land law, we are going to certify this area, and that will allow us to get back on site. The contractors usually come back from their winter hiatus in March, April. There's the possibility that some of them will be staying through the winter because they're working on catching up on PetroChina work. So we'll certainly be phoning them up the moment we get a land issue sorted out to say, hey guys, where are you? Have you got the kit? Have you got the people? Let's get on with it.
Fantastic. And the China COVID lockdown, is that still actually causing you problems, or have you got all the kit in that you need for ahead of March?
Yeah, I mean, for Block 5, we've got all the kit in except 1 or 2 widgets, but they're relatively small and not exactly critical path at the moment. I think they'll be in very soon. On Block 20, it took us a long time to get some stuff across the border, and even for some of it to leave the factories in which it was manufactured. Unfortunately, the city of Daiqing, which is the home of DQE Drilling, the company that provides all these services, that was in lockdown through most of September and October on a citywide lockdown. So you can understand why things weren't moving. They've moved now, though. The Mongolian side of the border with China has been open throughout. The Chinese side is the one that's been shut down. And obviously, a large amount of material to be transported across the border was accumulating on the Chinese side, and it was coming across very, very slowly. It does now seem to be improving, and with what's happening in China generally, we're pretty hopeful that we won't need to be talking about COVID-19 impacts on our work anymore.
John Smith asks about the Velociraptor drill. It's ready to go then with permits and equipment in place. When can we expect the drill bit hitting the ground?
Yeah, well, the contractor for this has quite a lot of work for the rig that we're going to use, but he's indicated to us that in the time frame of sometime in the middle of the first quarter of next year, the rig should be available. And this is a rig that is winterized. It can work throughout. It has done in the past in Mongolia. It costs a little bit more because you need more diesel to heat stuff up, but it is winterized and available. So we're looking at a second half of the first quarter or into the second quarter to drill that well. Yeah, there's no permitting standing in the way, and there's no equipment issues that stand in the way either. The contractor is actually planning to import a bigger rig from South America, we believe, and he's actually told us that if it arrives in time, we can have that for the same cost of the smaller rig that we are planning to use. We're happy with either, but my experience has been if you've got a bit more horsepower available, then you should probably take it. But we'll see what their timing is. We're not going to wait for another rig when the one that's there is perfectly serviceable and perfectly usable and is working now.
Okay, and has it been an expensive time for you? You've got Velociraptor on the go, you've got Heron 1 on the go, and you've got all the kit in place, more or less. You know, what are your bank balance? What's your funding looking like at the moment?
Okay, well, we raised $10 million in 2021 in the hope of being able to start, because of all the promises that had been made about the land issue being fixed so quickly. Obviously, that didn't happen, but we haven't sat on our hands for the year. As I say, we've bought equipment. We're around about $6 million in the bank now. You know, we've been reasonably frugal with it on overhead. We certainly haven't recruited anybody new. We've been running with the same team we've had throughout. We intend to continue with that as we enter into the development. So we've got plenty of money left for the completion of Heron and some more drilling, depending on what we finally come up with on terms and conditions for the DQE drilling contract. And yeah, we have money available to drill Velociraptor 1, and we'd like to get started on renewables. So at the moment, the cash position is reasonably good.
It might be a useful point to ask this question. You know, over the 20 minutes or so, you've given us a comprehensive overview of your drilling plans and timelines. Could you just remind our audience what the recovery factors and the peak production rates you're looking at Heron? And why Heron is still such a good thing.
Yes, yeah, we mustn't forget that the asset is there.
No, it hasn't changed.
Yeah, it is there. It comes down to, you know, I think generally we've got an agreement, and as I said, we had a competent persons report done. Well, obviously we paid for that, but they insist that they will only put their own opinion in it. And they said 200 million barrels in place, which was around about the same number we had, or 194. Now, obviously the recovery factor then determines how much of that you're going to get out. And this basin has a lot of wells drilled in it by PetroChina. They haven't applied some technologies that we would have expected them to have applied, like a lot of horizontal drilling once they know where the sweet spots in the reservoir are. Fracks that are a little more than just rudimentary. I don't want to be rude, but they seem to do the same frack for every well, kind of irrespective of what the reservoir looks like. And some other technologies like radial drilling or fishbone completions that actually increase reservoir contact. So PetroChina's recovery factors so far are what you would say low compared to what they achieve in their fields in China, where some of the reservoirs are similar, and what generally is achieved internationally. You know, if you're not achieving 30% recovery factor these days, then you're not doing it properly, would be most people's view. So we've done
200 barrels.
I'm sorry, Donald?
30% of 200 barrels?
Yeah, so we're aiming for, I'd like to think a minimum of 30% recovery factor once we've got a full spread of pressure support through water injection or CO2 injection or whatever we choose to use. So if it was a 15% recovery factor, then it'd be around about 33 million barrels. I'm aiming for a 30% recovery factor, and that will get us 60 million barrels. And with the fiscal terms being as good as they are, that translates into a pretty valuable asset.
Mike Buck, CEO at Petro. We're out of time. Fantastic. Thank you so much for joining us. That was terrific. It's been a tough year. Let's hope that 2023 is your year.
Let's hope so. Thank you very much indeed.
Thank you, Mike. And that's it from us after another great evening. Thank you very much to all our speakers for joining us live from London, from Perth, Australia, from Italy, and to the support teams for they always do such a great job in supporting us and getting us here. Not forgetting the two Daves, Mike, Andrew, Becky, Rob, Alex, and the entire London South East team who've, as ever, done such a fantastic job, terrific job in delivering this event and all the other events this year. We put on about a dozen of these a year. Thank you one and all. That's your Christmas thank you, by the way, guys. We hope you've enjoyed our live events in 2022 as much as we have. Next year, we'll have another dozen or so webinars like this one. Our emphasis, I like to think, is on quality as much as quantity, and we hope to showcase some more well-run companies, leaving you, of course, to choose the right time in the cycle to buy. Talking of good investment opportunities, I would like to take this moment to say a special thank you to Jeff Burdett and the team at Red Cloud Financial Services. And they are the Canadian brokers who connect us to such high quality mining companies in Canada. And we look forward to working with them again in 2023. They've come up with some really cracking Canadian companies, and it will be a joy and a pleasure to see some more. Finally, a huge thanks to you. Once again, without the audience, we are nothing. So thank you once again for being such a great audience. And we look forward to doing it all over again next year. Enjoy Christmas when it comes, and may your investments go up rather than down in 2023. Good night, and enjoy the rest of your evening.